In the year 2000, one man lost $6 billion. Not in decades, not in years, in one single day. The media called him reckless. Wall Street called him finished. Investors believed his career was over. But 2 decades later, that same man would make one of the boldest financial decisions in American history, a decision that changed how corporations view money itself. His name? Michael Saylor. And this is not just a crypto story. This is a story about vision, failure, and comeback. Michael Saylor wasn't born into wealth. He grew up in a military family in America. Discipline was normal. Excellence was expected. From an early age, he showed something unusual, an obsession with systems, logic, and the future. He earned admission into one of America's most elite institutions, MIT. There, Saylor studied aerospace engineering. He wanted to design the future. But fate had other plans. A medical condition ended his dream of becoming a pilot.
For many people, that would have been the end. For Saylor, it was a redirection.
In 1989, at just 24 years old, Michael Saylor co-founded a company called MicroStrategy. At a time when most businesses barely understood computers, Saylor believed data would become the world's most valuable asset. He predicted something revolutionary. Companies that understand data will control the future. MicroStrategy built software that helped corporations analyze massive amounts of information. And Wall Street noticed. The company grew fast, very fast. By the late 1990s, MicroStrategy became one of the hottest tech companies in America. The internet boom had arrived. Technology stocks were exploding. Investors were pouring money into anything connected to the internet. MicroStrategy stock skyrocketed. Saylor became one of the youngest billionaires in the United States. His net worth crossed $7 billion. Magazines celebrated him. Media praised him as a visionary.
He owned luxury homes, private jets, unlimited influence. It looked unstoppable. But markets have a rule. What rises fast can fall even faster.
March 2000. The dot-com bubble burst. Suddenly, tech valuations collapsed. MicroStrategy faced accounting scrutiny. Investor confidence disappeared overnight. And then, the unthinkable happened. In a single trading day, Michael Saylor lost nearly $6 billion of personal wealth. One of the largest wealth destructions in American history. Headlines turned brutal. Tech genius falls. Billionaire bubble burst. Wall Street moved on. Most people assumed Michael Saylor was finished. Failure at that scale changes a person. Friends disappear. Investors doubt you. Media forgets you. For years, Saylor stayed mostly silent. While new tech founders became famous, he rebuilt quietly. No hype, no spotlight, only learning, only reflection.
He began asking deeper questions. What is money? Why do currencies lose value? How do companies protect wealth long-term?
Questions that would later lead him to something the world still didn't understand. Bitcoin. The man Wall Street counted out was preparing for his greatest decision. A decision so risky that even billionaires called it insane. By 2020, Michael Saylor was no longer chasing fame. MicroStrategy was stable, successful, profitable. But something worried him. Not competition, not technology, money itself. The U.S. government began printing trillions of dollars during the global crisis. Stimulus packages, economic rescue plans, unlimited liquidity. To most people, it felt necessary, but to Saylor, it looked dangerous. He realized something terrifying. Every dollar sitting in corporate reserves was slowly losing value. Inflation wasn't loud, it was silent theft. And MicroStrategy held hundreds of millions in cash. Doing nothing suddenly became the biggest risk.
Saylor began a deep investigation. Gold? Too slow. Real estate? Hard to scale globally.
Stocks, already inflated. He studied monetary history, Roman currency collapse, gold standards, central banking systems. Then one night, he encountered Bitcoin. At first, he was skeptical, like most Americans. Digital money, internet currency, it sounded absurd. But Saylor didn't dismiss it. He researched relentlessly, hundreds of hours. Physics, cryptography, game theory, economics. And slowly, his perspective changed. Bitcoin wasn't just technology. It was engineered scarcity. Saylor reached a radical conclusion. Bitcoin was not competing with payments. It was competing with money itself. Only 21 million Bitcoin would ever exist. No government could print more. No central authority could control it. For the first time in history, humanity had created a perfectly scarce digital asset. To Saylor, Bitcoin looked like digital property, digital gold.
A financial lifeboat in an inflationary world. But believing privately was easy. Acting publicly was dangerous. August 2020. Michael Saylor made a decision that shocked Wall Street. MicroStrategy converted $250 million of company cash into Bitcoin. A public company, buying cryptocurrency. It had never been done at that scale before. Critics exploded. Analysts called it irresponsible. Financial media questioned his sanity. Some investors predicted bankruptcy. They said, "This is corporate suicide." But Saylor didn't stop. He bought more, and more, and more. At first, markets laughed. Bitcoin was volatile, prices crashed, headlines mocked the decision. But Saylor remained calm. He appeared on interviews, podcasts, conferences, explaining Bitcoin with clarity few understood. Slowly, something changed. Other institutions started watching, then copying. Tesla entered Bitcoin. Institutional funds followed. Corporate America began reconsidering treasury strategy. The conversation shifted from, "Is Bitcoin real?" to, "How much Bitcoin should we own?" Crypto markets crashed again. Billions wiped out. Fear returned. Many companies sold. Many investors panicked. But Saylor did the opposite. He kept buying, even during massive drawdowns. Because his belief wasn't based on price. It was based on conviction. He famously said, "Bitcoin is the strongest asset humanity has ever created." To supporters, he became visionary. To critics, reckless. But history was still unfolding. Years after losing billions, Michael Saylor stood again at the center of global finance. MicroStrategy became synonymous with Bitcoin. Its stock moved with digital assets. Its strategy rewrote corporate treasury playbooks. The man once written off by Wall Street had influenced an entire generation of investors. Failure didn't end his story. It prepared him for conviction. Michael Saylor's journey teaches something deeper than crypto. Innovation always looks crazy at first. The internet looked risky. Amazon looked overpriced. Bitcoin looked impossible. Every financial revolution begins with disbelief. The question was never, was Bitcoin safe? The real question was, who had the courage to understand it early? From losing billions to betting everything again, Michael Saylor proved one timeless truth. Fortune doesn't reward comfort. It rewards conviction. In the end, markets test intelligence, but they reward belief backed by knowledge. And sometimes, the greatest comeback begins after the greatest fall.
This video is for educational purposes only, not financial advice. If you found value in this story, like the video, share it with someone who needs it, and subscribe for more true market stories.